Good morning. My name is Allan Zaragoza, and today I want to talk to you about index futures. What is it and how to trade it? If you want to take a quick second to write down my email, if you'd like, afterwards, if you have any doubts, concerns, clarifications, you can feel free to email me. I'll also be around after the presentation. If you want to come up and ask any questions, we can do that as well. Give you guys a few seconds to do that. All right, so yes, index futures, what is it and how to trade it? Let's move on. So before going into index futures, I wanted to talk about different markets that they're out there. I'm going to start off by talking about the stock market. This is the general one. Everyone knows what this one is for the most part. We have a stock market, which basically is made up of different companies, small or big, Apple, Google, Amazon, Starbucks. You can either buy or sell these stocks, uh, place puts or calls for options trading, things of that nature. Next, we have the foreign exchange market. This is where you trade different markets, uh, different pairs, I guess you could say. Canadian dollar, Australian dollar, US dollar, British pound, euro. You go ahead and trade, excuse me, you can pair these currencies and trade them whether you think one currency is stronger than the other. That's how you would trade that. Then next you have commodities. Commodities market. This is where you trade oil, corn, wheat, gold, things of that nature. And index future, which is the market we're here to talk about, is Dow Jones, also known as US 30, NASDAQ, also known as the NAS 100, and the S&P 500. I just want to touch base on these markets because I know there's different options out there, and if index futures is not for you, then you go ahead and dabble in these different markets and see what suits you best. I more or less dabbled in stock market, foreign exchange market, and I finally settled on index futures. It's just more appealing to me, and I'll go ahead and touch base on why that is here in the next couple of slides. So my knowledge, I've been knowing about the stock market since early 2014. I was sort of younger, early 20s. Oh, I don't think I was 20 even. I think it was 19 maybe. And I just, sort of taught myself what's a good investment, dividend stocks, reading earning reports, things like that. There's not really a one size fits all. So you can go ahead and this is why I touch base on these markets. I was introduced to the foreign exchange market by some friends. This is March of last year. Together, we took a mentorship under ICT, Inner Circle Trader, also known as Michael Huddiston. I still, keep up with some of his teachings. So his idea is that the market is run on an algorithm, and sometimes there is a manual intervention by actual people who run these markets, known as market makers. So this is just to set the foundation or the idea of what I'm about to teach you. This is just an idea you have to get through your head that buying and selling does not influence the market like you think, maybe to an extent, but that does not operate or run the market. So I learned about, currency pairs, different times of day to trade for your best result. Feel free to look them up. And so yeah, tell me what you think. But I think it's a great concept, and it's worked out well for me so far. All right, things to know. We have news, time of day, and setup. There's certain news that affect the market and influence it tremendously, which makes it volatile, which could be a good thing or a bad thing. If it's a good thing, you caught the wave or caught the run, and you make a profit really quickly. If you're not on the right side, then you get taken out uh, really quick, and you'll lose a lot of money quickly. A certain time of day is more volatile than the rest of the day. This is usually a New York session. A lot of people around the world trade this session, so it is the most volatile out of all the times in the day. As far as the setup, we'll talk about that more in detail later, but these are the three things you want to know when setting up a trade: news, time of day, setup. If you keep it consistent, look for one thing in specific, then you'll be a-okay. Instead of learning 100 things, you can just focus on one and it'll pan out in your favor majority of the time. One rule of thumb is that when news does come out, just wait about 30 minutes for it to, do what it wants to do in the market, whether if it wants to go up or down, just let it pan out. Don't try to trade exactly when the news hits because you might be caught on the wrong side and have a bad day. Okay. So these news are high impact news, major impact news. As you can see, COVID. COVID was a big one that affected the market tremendously, as you all know. A lot of red days, a lot of negative days around that time. FOMC statements, federal fund rates, federal chairman speaks, PMI, employment change, unemployment, things like this have a great impact on the market. As far as U.S. markets, which is futures and the U.S. dollar, are very highly influenced by these events. Before we move on to the next, I just want to touch base real quick on the website that I happen to use for keeping up with news. This is Forex Factory. As you can see, you can filter. I have it filtered for high impact news for the US dollar, but you can go ahead over here and you can see this is high impact news, medium impact news, low impact news, non-economic, things of this nature. You can filter out the different currencies: Australian dollar, Canadian dollar, euro, British pound, Japanese yen, New Zealand dollar. You go ahead and filter whatever suits you, but as of right now, I only have the US dollar. Sometimes I'll, filter even the medium and go from there, but for the most part, this is what I see. All right, back on to the presentation. All right, so different sessions you can trade, or it's recommended to trade. You have the New York session, London session, and the Asian session, excuse me. These are the sessions where there's the most volatility in the market. Again, I'll show you another website that I use to keep track of this. This is forexmarkethours.net, and it shows you kind of like a nice little bar graph here to represent the volatility or the volume, people trading, amount of people trading during these times. So this right here is considered your Asian session. And then over here, London market opens, have a bit of an overlap with the Tokyo market up until 6 o'clock Eastern time, 6 a.m. You have a little bit of volatility here. And then we have this big overlap with London and New York. And, New York opens. And then these are the three different sessions that you have more opportunities, more setups to trade, since they are the most volume traded and volatile. All right. So touched on those different markets. So we're going to talk about the New York session. New York session core trading hours is 9:30 a.m., 4:30 p.m. As you can see. So for us, that would be 6:30 a.m. to 1 p.m. here on the California coast. And I'll go ahead and show you where you can find this information. So over here, you see here is the New York Stock Exchange website. You have a different hours, but here we have the core trading session, 6:30 to 4 p.m. Or sorry, 6:30 our time, obviously, but 9:30 a.m. over there on the East Coast to 4 p.m. on the East Coast. So yeah, these are the times you want to be trading to expect. Expect a good trading session. All right. We have some key terms I want to talk about real quick before showing you the setup and the balance. This is an area in the market where you can see price likes to revisit. It can be a gap. It can be a gap in a candle. I'll go ahead and outline that in the charts. Liquidity, this is basically, so liquidity, buy stops, sell stops is all sort of tied in together. So this is people pricing trades, either buying or selling. They like to place a stop loss to prevent them from losing more than they're willing to lose. And it'll sort of take them out of the trade if it hits it. So the market likes to track to these areas before accelerating or taking off in the opposite direction. Right, so let's take let's take a look at some examples of volatility and setups. All right, so we have here, this is the, excuse me, let me zoom in. This is the US 30, which is the Dow Jones market. Here, as you can see, I have outlined, see if we can zoom in a little bit closer. This is 8:30 to 12, and I have a gap here. This is what I like to call the lunch that they take. So the markets are not, excuse me, they're not moving, or just do not try to look at the market during these times. And then we have the afternoon session, which is 1 p.m. to 4:30 p.m. All right, and then here I have the, well, it's just shaded area more or less, but it's correlation with 9:30, which is the when the core market trading starts, according to the Nasdaq. Excuse me. So as we can see if we pan out a little bit, we can more or less see how there's a lot of action during these hours. I mean, of course, you can have some before or after, but for the most part, as you can see in these areas, you have more action happening. Okay, so if we want to, I operate in a lower time frame, usually 1 minute, tops 5 minutes. And as you can see earlier when I clicked on this chart, I kind of had it separated. I had different time frames that I used. So let's go ahead and this is the latest one. This is today, May 27th. As you can see, May 27th as well. This is Friday, and this is a nice setup. That would have been a good trade. So let me go ahead and backtrack here. So this is if we want to talk about imbalances, this is, let's see, this right here is an imbalance. Boom, right here. So you can see there is a gap in this candle. So that is an imbalance. This over here is an imbalance. As you can see, let's see. I'm sure there's an imbalance here if we go in the lower time frame. Let's see, 1 minute. Where was I talking? Somewhere here. Okay. Oh, this is 26. Sorry, gotta go to May 27th. Yep, sure enough, this is a tiny imbalance here. More clear one here. As I had mentioned, this is areas in the chart that price likes to revisit or come back to before exploding. As you can see, boom, explosion, comes back into this big imbalance, boom, explosion, smaller imbalance, boom, explosion. You could have done this one more time over here, as you can see. Boom, one more time. So this is what you're looking for. Another way of seeing it, I guess you can say, is this is a return to an imbalance, as well as taking these this liquidity here. So imbalance plus liquidity, this would have been a great thing. Here, you have this one. This one is return to imbalance and taking this liquidity of these candles. As you can see, it is a little bit lower than them. Sorry. Boom. And shift. Okay, you see, coming a little bit lower than those values. So yes, this is the setup. And you know what? Let me just give you one more example. I know we're running a little bit over time, but let me, just so we can clarify and show you that it is consistent more or less. All right, let's just go back tomorrow. You know what? Tomorrow. I don't have to, I'm sure we'll find something. That's okay. All right. Let's see. Okay, I see a big pull here. This might be a, let's see, where are we? 26. Today's 27th. Yep. So if we go, sorry, if we go to the 5 minute, see it presents itself a little bit nicer. Looks a little bit choppy on the 1 minute, but if we zoom out to the bigger time frame, we see this big imbalance. If I can get it. Big imbalance. Boom, right here. Goes back to it. As you can see, these little dips, taking all these buy stops. Excuse me, liquidity taken over here, lower time frame. See another little imbalance here. Comes back to it. And this is a better trade I would have taken because it's in correlation with the 930. 930 is, oh, it's such an important time. As you can see, whoop, I don't know what happened there. Okay, let me see, 26, are we still here, 26? No, we're back on 27. I don't know what happened there, excuse me. Okay, so yeah, like as I was trying to outline earlier, this is a little imbalance here on the 1 minute, boom. This is the setup right here. So you can see 930 is over here. This is why I have the shaded area, plus or minus 15 minutes to look up for an ideal setup. So yeah, this is the websites, like I went over, Forex Factory, look for your news, markethours.net to see what session you want to trade. And this is TradingView that I use to look at these charts. All right, so again, here's a little, what do you call it, a bullet chart of the websites I use. And also I tagged the YouTube page for Inner Circle Trader, which is the mentor I use. Again, my name is Allan Zaragoza. My email is up on the screen. Feel free to reach out to me if you have any questions. Hope you enjoyed my presentation and hope you learned something. Thank you so much.